What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be talking about in this update is a little bit of the technicals on what we're seeing on AMC on some of the longer time frames and what we have going forward over the next couple of weeks. Now, we are going to be getting the CPI data tomorrow morning, which is going to be a measure of the inflationary pressures that have been kind of weighing on our overall economy. We're going to see if they come in hot, if they come in a little bit lower than expected, and that's really going to be driving the market tomorrow. Now, we're also going to be going over some of the Ortex data on both AMC and GME, but the two main things that I really want to kind of talk about in this video with you guys is these hedge funds and these big money institutions that are trading outside money, or sometimes even their own money as well, are on the verge of collapse. Tiger Global is struggling. BlackRock is having issues as well. And there's another firm that not a lot of people have talked about that is also having significant issues at the current time as well. Now, in addition to this, we've talked about this situation with Goldman Sachs liquidating a lot of their equity positions in the past. And if you look back to their most recent earnings report, they are doing the same thing again. It's a sign of things to come in the overall market, a flight to cash, a flight to safety. And we're going to go over exactly what we could potentially see from this and what the effects are going forward. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, you have seen the amount of success that people have been having with this 1348 trading strategy. Our proprietary trading algorithm is up around 10% at the current time, and it's only been trading for about 2 weeks in this volatile marketplace. So if you guys want access to all of those private live streams, the alerts on over 850 stocks, make sure you check out that link down below in the description. So AMC closed the day today at $11.84, down about 5.43%. This is absolutely not what we wanted to see today at all, especially after the pretty positive reaction that we were seeing to earnings in the after-hours pre-market and right as the market opened today. But then the overall market started selling off. The market ended up coming back, but AMC did not. So what we really need to look for in order to really get us back going to the upside is that longer term trend of the overall market starting to come back to the upside here. In the last time that we saw that, remember, we've gone over this a couple of times about when we saw AMC do this, and it was in this range right here. This matches up perfectly with the SPY. So we're going to need to see the overall market start to come back up to the positive direction. When are we going to see that? Well, we're really going to need to see this fear leave the market from the inflation, the war over with Russia and Ukraine, the rate hikes, the supply chain issues. We're really going to need to see a lot of those things start to relax before we can start to see that trend going back to the upside. And again, here we saw this test of the 13 EMA again on the 4-hour and then made a new low. So that is the trend that we are seeing right now, and we need to really start trying to reverse that trend if we are going to see that the share price come back up to the upside, obviously. So when we come over and take a look at some of the Ortex numbers over here, let me just give this a quick little refresh because the securities lending market for AMC right now is hot. We're seeing 6.43 million borrowed shares today, about 3.8 million returned with a net borrow of about 3.25 million shares. 19.85% estimated short interest, but the exchange reported short interest data came out today at 19.52%. And on April 29th, right here, the settlement date, the Ortex estimate was around 18.5%. So we could see these estimated numbers right here start to climb back up. Remember, a lot of people were very disappointed after the last time when Ortex overestimated the short interest. And we started to see the numbers, the estimates from Ortex in the weeks after start to come down. And now we're most likely going to see the opposite effect. But remember, right here, shares on loan, 138 million at the current time. If we start to see the shares on loan start to get to 140, 145, 150 million shares on loan, that's when we are getting to that closer true 100% utilization. And that's also when we could start to see the cost to borrow go up as well. We see it at 3.54% on the maximum today. But again, we could see those numbers really start to skyrocket once those shares on loan start to increase. Now, coming over to GME over here, we've got 19.89% estimated short interest, 6.85% average cost to borrow, 8.27% cost to borrow max, and The exchange reported short interest numbers, 21.49%. That is very, very, very high. Now, I want to get into the situation with these potential for these hedge funds to start collapsing if they have not already in the very near future, especially with the overall volatility that we've been seeing in the market. So we've heard about Tiger Global a couple of times over the past couple of weeks, but hedge fund loses $17 billion in tech sell-off in one of history's biggest dollar declines. That is a giant loss to be taking at your firm, and it's none other than Tiger Global. Now, remember, we've talked about these Tiger Cubs in the past, people that kind of cut their teeth at Tiger Global before going off and starting their own firms with funding from Tiger Global. Bill Huang is one of those individuals. We've also seen, I think, a couple of other individuals as well coming from Tiger Global really, really mess up in this current marketplace here. But Tiger Global is having very, very significant issues right now. And as we can see here, citing estimates from LCH Investments, the FT reported that in just 4 months, around 2/3 of the gains of the hedge fund has seen since its 2001 launch has been wiped out. 2/3 of the overall gain. That is absolutely insane. Now, when you think about this right here, 2/3 of the gain of the overall hedge fund being wiped out in a couple of months, and the overall movement that you've seen in equities doesn't make a whole lot of sense. They are most likely trading with wild amounts of leverage right now that is going to lead to aggressive margin calls. Now, if they cannot meet those margin calls, well, they get liquidated. If they don't have the funds to really settle their obligations, bankruptcy. Now, again, over here, BlackRock star trader goes net short as hedge funds loss mounts. Alistair Hibbert shifts strategy with stock markets tumbling. The strategic equity hedge fund is down 13% this year. Again, these funds are not properly positioning themselves in order to withstand these market conditions. And that's why you're seeing the overall volatility in the market right now. This big money is really trying to find a point where they're comfortable kind of making smaller trades. Because when you see the overall volume in the market start to really pick up, a lot of money is flowing back and forth. You're going to see a lot of volatility. Now, when that starts to come down, you start to see a little bit less volatility, a little bit less trading going on. That's when you're going to know that these funds are kind of okay and have settled some of their obligations in terms of these big institutional investors. And they're kind of ready to start basically picking their poison in terms of where they want to put that money next. Now, in addition, this is a little bit older. We see Pelham Hedge Fund suffers its worst monthly loss in 14 years. The firm's flagship long-short fund is down 18.5% in January. All the losses were attributed to the fund's long positions. Now, this was over in Europe over here. So you guys can see that these funds are struggling right now. And with these three right here, plus Melvin, that's 4 institutions right now. Obviously, we're going to be seeing more funds start to really have issues as we start to come down even further in the market. Now, in addition to this, we also have this situation with Goldman Sachs. So just a quick recap. In Q2 of 2021, Goldman Sachs sold off about 25% of their total equity position, meaning that they just liquidated 25% of whatever they were holding. Now, when you continue to look through at what they've done every single quarter, they've done this in almost every single quarter since that initial giant sale in Q2. So fast forward today, when the harvesting progress, meaning the liquidation of assets, is ever present, shows that the bank continued to sell even more stock, and in the first quarter sold an additional $1 billion gross. The dispositions number rose from 18 billion to 19 billion, offset by the incremental 1 billion purchase, 7 billion in Q1. So what we're looking at overall here is that these large institutions, these big money banks, Goldman, BlackRock, we're seeing a lot of other financial institutions too, they're having very significant issues. So now what does this mean for us potentially with our AMC positions and GME positions going forward? Well, there's probably not going to be an immediate effect of what we're going to see unless some of these funds actually collapse, and then they have to completely settle all of their obligations and cover any outstanding short positions, sell off all of their long positions, and basically restructure their entire business. Very similar to what Melvin is going to be doing from now up until June. But again, this is going to weigh on the overall market. If you start to see these funds really starting to have issues, the volatility in the overall markets is going to continue. So that is going to wrap up this update on AMC. AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys bright and early tomorrow morning on the live stream.